Alright guys, we're back. This is Austin with the Business Strategy Game coming back at you. So let's take a look at what just happened. So this is the report at year 19. If you guys watched the last video, you would have seen the move that we made coming into this year. And good news, we are still ranked number 1. We're still on top. But ooh, this was a close year. If you look, the BZs, they really came back. I mean, they came hard, and they're right there with us. I mean, this could go either way. So we have a 4-point lead right now. We really can't mess this up, or we are going to lose this game. So let's take a look at where we're at and what we need to do to win. Now we're going to take a look at. We're actually going to have a strategy meeting, or a few strategy meetings between now and the time that we have to submit these decisions. But yeah, this is just kind of a first look. So what happened this year, and where did things take a turn? Well, let me also show you this first. So there's really been kind of a push for production in this game between us and the BZs. Now we went out on a limb and built capacity last year. We had to borrow in order to do that, and we determined that if we were able to meet our financial targets, it really wouldn't hurt our credit rating, which is really what we were worried about, since that is a scoring criteria for the game. So we went ahead and we built capacity and went into the market, just doing our best work. Now, we did that because if we hadn't done that and BZs had done that, we would have been at an even greater production disadvantage, and they could have dictated to us the prices in the market. Now we have the ability to dictate to them. So because we're able to push the capacity, and we're able to move into different markets at will, we're able to charge the prices that we want to charge and kind of leave the rest of the market to them. They really have to react to us versus us having to react to them. Now what threw off the markets, though, was that cart company decided they were going to sell capacity. Now they didn't have much capacity to begin with, but they decided to sell capacity, putting them actually with less capacity than Team D, and Team D is the zombie team. No one's really playing Team D. They're just operating to soak up some market share in the event that we really kind of mess up. So putting themselves at a production disadvantage to Team D, I don't know what their strategies or what they're thinking, but it really kind of threw off the markets here. So let's take a look at what happened. With them not being able to really take market share, their market share dropped in this is Latin America. Let's do North America, because they were the North American leaders. So they dropped down to 14.5% in North America. Now this shift, we didn't have enough shoes initially to cover our market share, the market share demand in North America, and I don't know what happened. I'll have to go back and take a look and see what happened. But with them stocking out and not having as much production, it really created a shortfall and allowed Team D to come in here and just soak up market share. You'll see this across the board in all the numbers. They were at 10% market share previously. Now they're at 21%, mostly because we just stocked out. Same thing here in Europe. They soaked up market share because, again, we stocked out. And with a deficit like 264, I mean that's really our fault. So we didn't forecast correctly for our market demand, and it really cost us some market share here. BZs have become the market leaders in Europe and Africa, and that allowed them to gain some serious profits. They also took the private label market there. So you'll see in Asia Pacific we had more stockouts, and I don't think this is necessarily our fault. I think it was more the BZs that stocked out, and we just couldn't cover the shortfall. And here in Latin America, I don't think this was our fault either. Looks like the BZs seriously stocked out, and we just weren't able to cover that kind of shortfall. But we raised our prices significantly, and that shifted a lot of the demand over to the BZs. I don't think they were expecting that to happen either, since we had been charging a very low price in Latin America for the majority of the game. We had been, really, really low in Latin America. So I don't think they were expecting us to raise our prices above theirs, which shifted a lot of demand over to their shoes, since their shoe was less expensive, and they weren't ready for that kind of a shift. So it's going to be interesting to see what they do this year, going forward. Now, as far as the financials are concerned, the financials I thought were interesting this year. We didn't make as much net revenue as the BZs did, but as you can see, they have higher marketing expenses than we do. They're getting less operating profit than we are, and they have a higher interest expense. So we ended up making more net profit than them, which, I was happy with that. I don't know if anyone else is happy with it, but I was happy with it. And as far as our financials, we're looking good. We're actually in a really good position. Our earnings per share weighted average is higher than theirs. Our return on equity is up from theirs, and our stock price is up from theirs. So we're doing better in all of the financial metrics. We're also doing better on credit rating. I don't think they're going to be able to get ahead of us in credit rating, so I think we're going to win this. Almost guaranteed, unless they pay off their loans this year, which they might do. We're just going to need to take a look at all the different ways all the different things they can do in order to try to push themselves ahead of us. But if we can get to a higher credit rating in year 20, possibly pay off some loans, and then really rock these financial metrics, we'll definitely win this game. So that's really what our goal is. Now, when it comes down to what each team is able to do, really, the way that I see it, there's only a couple of different options, only a couple of different moves to make here at this stage of the game. Now, celebrities are up for bids. We actually have the opportunity to lose our final celebrity this year, but I don't know if it's going to make that big of a difference. We might just go ahead and say, say la vie to the whole celebrity game. We're probably still going to put in bids, but they're not going to be monstrous bids. So if anybody wants to bid over us, they can bid over us, and they can take the celebrities. Not a huge deal. When it comes to branded, so we have a couple of different options. We can either go in and try to soak up that market share that team that cart company left behind. So we have a massive opportunity here to be able to pick up sales of branded sales. We also have an ability to pick up private label sales. So it's really going to be a decision on where we're going to put our resources, and that's going to depend really on where we can get the greatest operating margin. So it seems like with the prices that we have set now, we have really, really high prices, but we're going to need to kind of track the market and see whether or not we're going to make more money per pair selling in the branded segment, or if we're going to make more money per pair selling in the private label segment. And that's really where it's going to fall. So we need to do a little bit of prediction and be able to predict what the BZs are going to do. I don't think they're going to go 100% into private label. It wouldn't make any sense for them to do so and drop all those branded shoe sales, since they're more or less guaranteed profit, especially with them carrying so much market share at this point. However, they could surprise us, and they could do that. On the flip side, we could go in and we could challenge them for the market share and try to get some of these profits. I don't think we would get the same. Well, I don't think we would get the same level of profit in the private label as we do in North America, seeing as how our private label strategy has been a very low bid in North America. So, but in other markets, it's really comparable. I mean, in other markets, we're talking about making $20 a pair, $17 a pair. We just need to make sure that we can sell these pairs. That's really it. We didn't get this bid filled last year because we were over what the BZ's bid, but this year they're not going to be able to take as much of the market, and they'll be able to take even less if they pick up those branded shoe sales. So we really need to do a good job predicting what they're going to do. If I were the BZs, what I would do is I would lower my prices in branded to try to soak up as much market share as possible, really leaving everyone in branded scrambling. So I would just create a bunch of chaos in the marketplace, and then what I would do is any shoes that I had left over, I would put in a private label at a high bid, because no one has the ability to really shut out private label at this point. Car company's not in private label, and neither us nor the BZs can actually take 100% of the private label market. So there's going to be some left over, and if I focus on the branded it would just open up whatever shoes I have left over in order to sell into private label and just soak up as much profit as possible. So that's what I would do if I were the BZs. I'm gonna post that to the team and see what they think about it and see what we can do in order to head them off at the pass. But that's really where we are at this point in the game. It's really our game to lose. So, of course, we're not trying to lose, but we need to be able to make the right decisions in order to come out on top here. And that's really it. So stay tuned. Yeah, stay tuned to this crazy game. I'm actually really surprised that that car company sold that capacity. That really just threw a complete wrench in what we were looking to be able to do. So yeah, anything can happen in this game, and stay tuned to our final decisions.